if you plan on buying a home in San Antonio, Texas in 2025, I can tell you that you are not alone. According to NerdWallet recent study, over 15% of Americans are planning on buying a home in 2025. At least they hope to buy a home in 2025. So planning on buying a home can be very stressful. And so I want to take a little bit of that stress away today and go over some of the things that you need to plan for as far as cost is concerned, and how that lines up with some of the homes here in San Antonio with a live example. So, for instance, we'll take a look here at a property that recently sold. And in this property here, this one is on the northeast side of San Antonio, and this property is actually sold. I'm not going to tell you what the property sold for. I'll tell you what it was listed for. It was listed for $285. It did have some price changes, but go ahead and have a little fun with this one while we're doing this very important work and figuring out what you're going to need financially to get into a home here. And just drop a comment. What do you think this home sold for? It was listed at $285. What do you think the final sales price of this home was? I will give you some details here before we get started. It is a 3-bedroom, 2.5 bath. As you can see, it's 2-story, 2,400 square feet, and it was built in the early 2000s. So it's not an incredibly old house, actually on the newer side for homes. So take your best guess in the comments. Let me know what you think this home sold for. I'll reveal that at the end of this video. So getting right into it, and I have all my notes here, all the prices, all the major things that you're going to need to prepare for. In fact, I think you'll be over-prepared if you jot this stuff down for your home purchase, and hopefully pleasantly surprised when you're done purchasing your house in 2025. Now, the very first thing that you're going to need to make a home purchase in 2025, you're going to need your earnest money. The earnest money is so important that they named the contracts that we use to purchase properties after it. Okay, so they're called earnest money contracts. Okay, especially if you're buying a home resale, you're going to end up doing an earnest money contract. And earnest money can be really any dollar amount. Okay, it's a negotiable point in the contract. It could be $1. Okay, it could be between friends or family that you're buying a house from, and you could put $1 on there. You really don't even have to put an amount on the earnest money contract, technically, but traditionally there's going to be some consideration in the contract, and that's normally a dollar amount. You could be $1, it could be $500, but most typically in 2025, what I would suggest is to be prepared to have at least 1% of the earnest money. Now, with this home here that we're looking at, this is a HUD foreclosure property, and according to HUD's guidelines, they would only accept a contract that brings in $2,000 for this price property, okay? Because it's over $200,000, so they would require a $2,000 earnest money deposit to be made to purchase this house. So you wouldn't get very far with HUD offering $500 to get into a house. However, if you are going to buy a brand new house, from time to time, I've seen deals in the past. I've sold in the past DR Horton homes worth $100 down. That was a long time ago. I think I was licensed back in 2007. I think somewhere around 2009, somewhere in some of that time frame. They were doing earnest money contracts for $100, which was crazy, but they really wanted to get rid of the houses, so they would take $100 down. Don't see that anymore, but just so that you get the idea that it is definitely a negotiable point in the contract for earnest money. Now, with that earnest money, it's going to be held at the title company, and depending on how you have your loan structured, all the other fees that you may or may not pay for in the contract, you may walk away with that earnest money on the day of closing, or it'll be credited to you for all of your costs that are associated with the transaction. So it is a credit to you as the buyer. Okay. The second line item that you need to prepare for is what's called option money. Option money is a right that you are purchasing in the contract to terminate the contract for any reason, and this can be a certain amount of days. Typically, what we're looking at is a daily fee for option money. I always suggest getting 7 to 10 days worth of option. Okay? That gives you enough time to do your due diligence, get your home inspection, get your termite inspection, get a quote for homeowners insurance, and make sure that you are really prepared to buy the house. And that is going to cost you anywhere from $10 to $20 a day in this price range for this house that we're looking at. Now, I've seen in some listings, sellers wanting $50 a day on an entry-level home or $100 a day. Especially if you get into the higher end homes, $1 million properties, the option money is going to be a lot higher because they're playing with a bigger investment. Sometimes it is a celebrity home or something of that nature, high security. And so they don't want to mess around with a bunch of looky-loos. So they make the option money very expensive. Now that option money is paid to the seller. Okay. The seller is going to get that money, and if you exercise your option and you say, you know what, I don't want to take this deal anymore, I want to walk away, the seller keeps that money. However, if you continue through the deal and buy the property, typically that option money is credited to you again at closing, so that you haven't lost that money. Pegged. From time to time, you might get a really hardline seller that wants to keep that option money and not credit it to you. It is a negotiable point, but typically it is credited to you on the final settlement statement. So option money is exactly the way it sounds. It gives you the option to cancel the contract at any point, and not any point, any time during that option period. 7, 10 days is pretty normal. If you wanted a longer option, you'd probably have to come up with a pretty good reason for that longer option. But typically, I don't see them going past 10 days. You might get 14 days, maybe if there was a holiday, week or something like that in the way, but typically 7 to 10 days. So the next line item here is survey. All right, and this is a residential survey. And what that is the survey, it is basically a measurement of the property that you're purchasing, the land, and if it has a house on it, the orientation of the house, where the house is located on that piece of property, what the boundary lines look like. Are there any encroachments? Is there anything from your neighbor's property that is encroaching on your property? That is what a residential survey is in a nutshell. Most title companies are going to want to see one of those so they understand what they are guaranteeing, that you have access to the property. That survey is going to show you where all the utility lines are. It's going to show you where all your structures are, your permanent structures are on the property. You can use the survey that the seller has if they still have their survey and it's not too old. Those surveys are going to cost you anywhere from $450 to $600 in the city. Now, if you have a country property, it could cost significantly more for a residential survey, because those surveys can get quite large and quite expensive the further out in the country that you're purchasing your home. So, but in the city, $450, $600, something that you can shop around for. If you decide you're going to use the seller survey, you just need to understand you cannot hold the surveyor responsible for mistakes if you are using the seller survey. However, if you hire your own survey company to come and survey the property, and down the road an encroachment was missed, then the surveyor is responsible for that survey. The next line item here, and this is a pretty big one, is down payment. Down payment can range from either zero, depending on what kind of loan you have, or if you're using a down payment assistance program, it could be 3.5%. Very popular amount is 3.5%. And that is under an FHA loan. Or if you're going to use conventional financing, it could be 5% or 3%, just depending on who your lender is and what their guidelines are. those down payment amounts vary greatly. Now, a very popular one you see now is 20%. A lot of people think that they have to have 20% down, but you really don't have to have 20% down to buy a home. Like I said, you've got 0, you've got 3.5%, you've got 5%, and it just depends on your unique situation. Now, pros and cons of whether or not you want to put a large down payment down. If you put 0 down, you are borrowing 100% of the money to purchase the home. You have 0 equity in the house. This is something people rely on. However, you need to know, if you don't put any money down and you have 0 equity, and in 5 years you want to sell the property, you may have a difficult time affording to even sell the property because you put 0 money down. The equity portion that you're building up over time increases as time goes by. So a very small portion of your payment is going to go toward your principal early on in the mortgage, and as time goes, greater and greater amount of equity goes towards your principal, what you owe on the house. Whereas if you put down 20% down, number one, you're not going to have to pay any mortgage insurance, which is great. If you have FHA or conventional financing, you won't have to have any mortgage insurance, and that mortgage insurance doesn't do anything for you. So that's a huge savings for you by putting that 20% down. Further, you need to sell your house in 5 years and have market fluctuations. You can sell the house. Most likely you will be able to sell the house without having to bring more money to the closing table. And so it is very advantageous if you do have 20% down to bring it. But if you don't have 20% down, you can still buy a house. You can use 0 down financing, 3.5% down financing, still get into the house. Okay? But you need to understand, you need to really want to be in the house for a long term, because it's going to take a lot more time to build that equity position up because you didn't put the 20% down. Now, the next item that you need to prepare for is inspection fee. Okay, this is something that some people skip this, and this is very crucial that you don't skip home inspection, especially if it's your first time. You're not so sure about how to fix things. You're not handy about fixing things. But further, a lot of homeowners hold back on their negotiations because they do expect that you're going to have a home inspection, and they do expect that you're going to find things that are wrong. And I've had listings where the seller said, I'm not going to do any repairs. And, that's just going to be tough. But when they were faced with seeing what the buyer was looking at as far as things that were wrong with the house, the seller almost always said, you know what? I didn't expect to see all these things on the home inspection. Yeah, we're going to go ahead and do some repairs. Even though they told me point blank, I'm not doing any repairs, Krishna. Don't expect that I'm going to do repairs. I said, oh, well, okay, but I can't, they're going to get their inspection, and, it is what it is. So be prepared to pay for a home inspection. Home inspections can range anywhere, like especially this house here. I would expect that this house would probably go for about $400 for a home inspection. It's not an old house, so it would be about $400. Now, an older house, the older the house is in general, the higher that inspection fee is going to be, because the inspection is going to trigger a lot of grandfathered in items, but they had to call it out on the inspection. So the report is going to be much larger for an older property. You can have 2 properties standing next to each other, a brand new house and a house that was 40 years old. The home that is 40 years old is going to cost more to inspect that house because so many more items are out of date, and the inspector's going to have to spend a lot more time inspecting that property. So the newer the house is, the cheaper the inspection report. Also, size of the house is going to matter as well. Okay, so the larger homes are going to cost even more to inspect than the smaller homes. The next item up is termite inspection. Okay, termite inspection can cost anywhere from $70, $85. It could be $100. Really varies, and sometimes you can get those inspections done at the same time as your general home inspection. They are separate inspections technically. Some inspectors do both termite and do the general home inspection altogether, but typically a termite inspection is a separate report and a separate payment altogether. The next is buyer broker fee. This is relatively, this is not new, but it is being addressed differently these days. Buyer broker fee, you want to budget for that, even though typically the seller will pay the buyer broker fee. You can ask for the buyer broker fee to be paid in the event that they're not advertising that they're going to offer one. They don't advertise the buyer broker fee anymore in the MLS. Your agent should be asking the listing agent, is there a co-op buyer broker fee offered? Right now, yes, most typically there is a buyer broker fee that's being offered, but your agent needs to ask what that fee is and then let you know what it is, because you'll have a contract with your agent on what their fee is going to be before you even shop for a home. Now, again, that is a negotiable point between you and your buyer broker, what the fee is that you're obligated to. And in turn, your buyer broker is going to check on those fees that the selling agents or listing brokers are offering to pay. I've never had a problem with buyer broker fees. I know there's a lot of misconceptions about it right now. It's still kind of a new thing that the buyers absolutely have to have that buyer broker contract to even look at homes, but you don't owe anything as a buyer unless you actually contract to buy the property, and it is your buyer's agent responsibility to disclose to you before you are under any contract how much the fee is, if there's a fee being offered by the listing agent, and so on and so forth. So there should not be any surprise, sticker, shock, anything like that going into a home purchase. And the next item is title insurance. Now, title insurance is a requirement, especially if you have a mortgage that's going to be taken out on a home. Okay, if you're going to buy a home and you didn't have a mortgage, the lender's going to want a lender's title policy, and you as the owner, you're going to need to have an owner's title policy for the property. And basically what that title insurance does is it makes sure that there are no liens, no one else has claim to that property, and also any future claims that may come up from past owner as you own the property. And now that title insurance is going to run you around 1%, a little bit less than 1% of the sales price. Now, historically, the seller typically pays for title insurance. There are small fees that go along with title insurance, but it's roughly about 1%, okay, or maybe a little bit less. The higher you go in price, the lower the title insurance fee is going to be, because there are some inflexible fees in there that don't go up with the price. So you're going to pay around 1%, maybe a little bit less, but definitely less the higher you go in price. And then the next last item that we're going to talk about, and this actually encompasses several different things, is closing cost. Closing costs you can expect to pay around 3.5%. Now, what's included in closing costs? These are predominantly prepaids, and these are going to be your taxes as the buyer, your insurance, loan origination fee, and discount points. So really loan fees is what this is, okay? So taxes, when you buy a house, you are going to be expected to set up what's called an escrow account so that your taxes don't fall behind. The last thing anyone wants is for the local tax man not to be paid, because if that happens, the taxing authority, local county, city, whatever, can come in and they can take the house back. And the bank doesn't want that, so they don't require you to have an escrow account set up. And part of that escrow account, they're going to take what they believe is going to be your taxes for the year, and they're going to ask for 3 months worth of taxes to be put in that escrow account. Okay. And then they're going to collect with your payment a portion of what they're projecting for taxes, so that when your tax bill comes due, they can just pay it off. As soon as the bill comes, they'll pay your tax bill for you, and then keep collecting taxes moving forward. Insurance, are going to want a year's worth of insurance in that account as well. They're going to pay. You're going to actually pay for a full year's worth of homeowners insurance front. So your house is going to be insured for a whole year, and then each month they're going to take a portion of what your insurance or the projected insurance rate is going to be for the next year, and they're going to put a little bit of that inside of that account every single month. Also, you're going to have another about 3 months worth of insurance put in there up front on closing day. You also have what's called loan origination fees. If you have a loan origination fee, that could be up to like 1%. Sometimes a lender, they'll tack that on. You could pay it at closing, depending on what type of loan you have. You can have it paid at closing, or they can tack it on to the end of your loan, but like a VA loan. So you won't see it, but it'll be due when you sell the house. And there's also what's called discount points in there. And those discount points basically can be used to buy your rate down. Okay, so if you have bad credit, or you just want to get a lower rate, you can ask for discount points. It's basically upfront interest. Now, that's not something I would recommend doing unless the seller is offering it. You see a lot of that happening right now with home builders. They're buying the rates down so they can keep selling properties, and they're buying them down to 4.9%. So it's a massive amount of money that they're actually offering on discount points right now with home builders to make homes affordable. So that is 8 different things that you really need to think about and budget for in purchasing a home. Now, most of them, as I laid out, are negotiable. You can get the seller to pay for it. As a recap here, earnest money, that's something that you bring. Option money, that's something that you bring. Survey is negotiable. Either you or the seller can pay for the survey. Down payment, depending on your loan product, okay, you're going to pay for that. Inspection, you're going to pay for that. Termite inspection, you're going to pay for that. The buyer broker fee, even though you technically have a contract that you would pay for it, another party doesn't pay for it, most probably the seller is going to pay the buyer broker fee. Okay. Title insurance, and again, that is a negotiable point. If you want to pay for title policy, you can, but typically the seller usually pays the title policy. Historically, there's nothing in stone that says that they have to, but again, it's a negotiable point. Typically, the seller is going to already have a title company lined up, and they're going to ask, wait, if they can close with that title company. And then closing costs, totally negotiable point, around 3.5% of the list price. So for this house that we were looking at here, let's say that $280, probably about $9,000, $9,000 to $10,000 in closing costs to buy a house listed at $285. Did you come up with a list or a sold price for this property now that you've seen the house several times? This house surprisingly sold for a lot less than the list price, and that is here in 2025. This house ended up selling for $225. I couldn't believe it. I looked at this house a few months ago, took a bunch of photos, and it was listed at $285. It sold for $225. It was a HUD foreclosure. I didn't think that the house needed very much work at all. It needed maybe some cleaning up. Maybe it needed some carpet here and there, but $225, I think somebody got a really good deal on this house. There were hardly any homes listed in the neighborhood, but for whatever reason, it ended up selling for $225 on a conventional loan. So if you have any questions about buying a home in San Antonio, Texas in 2025, you can reach me here, 210-260-6617. I hope this video was informative and that it helps you get into a home here. See you when I see you.